everyone to the Credit Union Connection and Own Your Banking. We have a great guest with us here today, in David Tuyo, who is the CEO at University Credit Union. Welcome, David.
Thank you. Glad to be here.
So David's a super sharp guy, and which is, of course, the reason I asked him to join us. And one of the things that really caught my eye about his credit union is the digital transformation that they had already started before COVID hit, and how that helped, of course, accelerate the efficacy and the efficiency of their offerings, as well as how their employees reacted and responded in the COVID crisis. So with that, I'll start with the first question. My first question for you: what is digital transformation for credit unions in your mind?
That's a great question, and probably maybe one of the most difficult things to answer, because it means something different for everyone. For us at University, digital transformation really means meeting our members where they are. And prior to the pandemic, we already had members in every single state in over 30 different countries, because we serve, the university community. So staff, faculty, alumni, administration, and the student base. And of course, when you serve universities throughout the state of California, you end up having that kind of demographic. And so we already had a pathway and a need to be able to meet our members somewhere else that wasn't branch intensive or branch reliant. And we had some success in that regard prior to the pandemic, but obviously with 2020, everything it brought, those plans were moved from 3 years to about 3.5 months. Our team did a fantastic job responding to it, but for us, again, digital transformation is just simply, if our members are now spending more of their time online, they're spending more of their time in front of their phones, spending more time in front of their services, we have to meet them where they are. And it's not about, hey, we have this great branch, come into our branch. Now, we still have those, of course, especially on campus, to serve the needs of in-person. But I think as you look at what's happened, what's transpired, work from anywhere, remote working, I think that's someplace that we're gonna have to continue to become masters of our craft, so to speak, and become better at serving our members and fulfilling their needs digitally.
And that's one of the things I think is often overlooked when you talk about digital transformation, is the human side, because there is a human user on the end. So talk a little bit about how your employees have responded to not only the digital transformation, but the acceleration of it.
Yeah, so I obviously really embraced it. They absolutely love it. Being able to serve our members remotely. What we've also done, as from a digital perspective internally, is really leverage artificial intelligence and business process automation, and also acquiring new technology that is still has yet to be rolled out, that we'll be bringing in-house in November, and then also in the spring of next year. But at first there was a level of fear, right? So beyond the pandemic, beyond everything else, they knew that we were trying to deal with and manage our expenses as a fiduciary on behalf of our member owners, while still trying to, again, grow revenue during a pandemic, to help then take and use that to invest to serve our member owners in the digital world. So there was a level of fear when we bring in all these bots that are essentially doing what they used to do, particularly in the contact center. One of the things that we did early on, at the same time as rolling out the automation piece of our initiatives, we also then focus in on career pathing and job laddering for our team. And so what we did was, through a knowledge-based approach, where they become certified financial counselors, then they become personal financial planners through a 2-year program at UCLA. It's a world-renowned program. They become alumni of UCLA. It's not a cheap investment. It's about a $10,000 investment per employee. But again, it is something that we think is worthwhile. So as we use the bots to answer questions like, what is your balance, and can I move money, and how do I do a wire? Now all of our bots are handling those questions, and our team is now talking about more complex issues, whether it's around a financial counseling question, whether a member maybe is facing a difficulty, whether it is job loss or health issues or disability. It could be maybe a life event as well, whether it's a new addition to the family or maybe it's something that's unfortunate like a death or divorce. They're helping our members walk through that. On the later end of the scale, if it's somebody that's closer to retirement, we're helping them and advising them around estate planning, talking about trusts, pour over wills, how to structure things appropriately, risk management pieces around insurance and not just basic term life, but then also, hey, you know what, given your estate issues and tax planning issues, this is this maybe is an opportunity to take a look at a second to die policy. So again, those kinds of opportunities are now being presented. And so our engagement levels are tremendously deeper. The context of the conversations is much deeper with our member owners. Our team is just doing an amazing job here. Seeing our ratings are going up. We're seeing many more 5-star ratings now as we got into these kind of conversations. And it's really interesting. So as we rolled out the bots, we saw also the team got a little nervous because the call volume dropped because the bots were handling all the calls. And it was interesting to me in that you see this pattern now that we've had the bots live for a number of months, and we saw a decrease for 3 months and we saw a spike again, decrease for 3 months and we saw a spike again. And what's happening is as we automate those kind of basic questions for our member owners, then they now are getting more complex questions. And so now they're calling in, our team's answering them. And then at the same time, the ones that aren't so complex that we can teach the bots to handle, then that helps further reduce the calls. But then we see the spike again because our members are having more complex issues. And so this, again, it's been a great ride, and the employees, our team has responded really unbelievably. As an organization, galvanizing together behind our common purpose of giving the university community a financial edge really has provided us the kind of stability needed to maintain, a steady hand through this pandemic.
I love that, so many companies feel like, why invest in my people? Because they're just going to leave me. But here it is proving out not only it creates greater engagement for your employees and a loyalty because they're happy where they are, but it also improves the service that the members are receiving as well. And I feel like so many credit unions miss that opportunity, but it is a large strategic undertaking too, I'm sure.
It is, and it needs to be. You need to have alignment and obviously buy-in from everybody. There's some people that just don't have the time to invest in themselves right now. Again, going back to meeting your members where they're at, you need to meet your employees where they're at too. There's some that are caregivers and they're caregiving for a parent or a child or a sibling. They may be dealing with other things in their life that just don't allow the extra bandwidth needed to pursue that education at this moment in time. Doesn't mean they don't want to. It doesn't mean they won't in the future. But right now, they just don't have it. And I think you have to make sure that you understand where they're at. It's not by force for us at University Credit Union. Is a choice. If one of our team members are performing well and they're obviously a critical component of the team, we're not going to make them go through a program that they don't have time for. We want to support them through the pandemic. We want to support them through the work-life kind of balance that we all try to achieve, and support them in their season of life that they're in. Right. And it's worked out pretty well so far, and our team knows that we have their back, and it's something that we talk about on a regular basis inside the organization. And it's an open question that we continually ask. Do you feel like we have your back? And our team is answering yes at the moment.
Yeah, and when I'm going to use the term treat the whole human as an employee, again, because the education you're providing, they're also able to treat a more comprehensive picture of the member as well, which
yes.
is, yeah.
And you're hitting the nail on the head. And we again, from an employee standpoint, they know that we're trying to help support them to become their best version of themselves today. Right. And we look at things, and it's one of my favorite quotes is, live as if you're going to die tomorrow, but learn as if you're going to live forever. Right. Mm-hmm. So don't be in a rush with your education. Right. Make it continuous and take a marathon approach to it. Don't just try to go through and check things off. Reading a book is not development. You have to attain that knowledge and then apply it, practice it, and then make it ultimately a habit. That takes time. You can't do that overnight. And so, again, those are just some of the things that we've over the years, we've learned to do things a little bit differently.
Yeah, yeah, which is ironic given the whole digital situation because that gives you immediate gratification. So I'm going to ask you real quickly too. You mentioned bots and bots serving the members and doing some of the work that your employees had done. How did you do that? Is that in-house, outside? Who did you have come in if you did? And how have the members, this is a big ass question. Sorry.
No, you're fine. It's a really good question. Some of the things, some of the initiatives we did internally, um, our partnership and ownership of MDC, Members Development Company, is tremendous. I think there's 70 credit unions that are, or nearly 70 credit unions that are involved in that QSO, and it's really amazing kind of the thought leadership there. Through our work with the Institute for the Future, we were developing 10-year scenarios, so that allowed us to think a little bit further out on the spectrum to kind of imagine things without constraints of today. Came up with some pretty interesting scenarios, and so all those guys, I say that because those are important layers around strategy that then informed our activities. So you think about things like a Horizon 3, where you're in that 10-year framework and you're kind of thinking about possibility. Then you go to Horizon 2. Horizon 2 is where you're making decisions and you're pulling things from Horizon 3 into Horizon 2, and then Horizon 1 is where you're taking action and implementing them. And so as we went through this kind of intentional discipline around our strategy, that's when we started figuring out, how do we make some of these happen? And of all these possibilities that we've now identified, what do we make decisions on? What do we make actionable? And that's where we came to our partnership with Interface. Interface AI, they're a fantastic company out of the Bay Area, and they've really helped us in our bot journey. And so it is a collaborative effort. It's not just buying things off the shelf. Everything's been customized. We developed a strategy, multi-year strategy about how we're going to roll things out. What areas made sense. So we started with a chat bot, then we went into a conversational bot. Now we're in voice banking. Right now we're launching our AI CC, so our artificial intelligence contact center agent. So now we have a cognitive agent answering the phones. So if we were to have another issue around the pandemic and we saw a huge spike in call volume, that bot can answer thousands and thousands of calls simultaneously. So our members are getting served immediately. And then anything that the bot can't answer, and then rolls to a live agent. So we call them member success coaches, but at the end of the day, it's one of our, a live person. And so Interface was played a large role in that piece of it. Also, obviously, on the mobile banking side, that's where most people are going to talk about. We're doing all the things there, added some features and benefits and functionality to help serve our member owners, but we still have a few hurdles there that we have to address. But the main partner for us in this journey around the bots was Interface. Also had some great support from Clasis. I need to make sure that we talk about them too. That was a partnership from MDC where we could leverage them for additional programming and resources. At our size, we don't have a team of programmers. We don't have 25 programmers yet. And so for us, we have to look to third parties and support to help with this process. As we approach $1 billion in assets, about 42,000 members for people listening. So you can kind of understand our size. So we're kind of, we're growing at nice rates, but at the same time, we're not a 10 or $20 billion credit union where you can have those kinds of resources at your disposal.
Yeah, and it's really interesting what you were just saying about the bots serving members, and there is, and we had a conversation earlier about credit unions and their feelings about their member service, and how many of them do say, do make claim that this is, our mission is great member service. Mm-hmm. Do you feel that the definition of member service has evolved with the times as far as the credit union market in general?
Yeah, that's a really good point. I think you do have to sit back and take a different approach. I talked to one CEO and he said, I hate chatbots. And I get it, right? So we're used to giving that kind of personal touch, and it is lost with the bot. Now, you can still, through your language that you're using, to the words you choose to use to respond to your members, you can still embed your culture in the bot, right? And so it's not just your balance is, right? You could easily make it more appropriate based on, who you're serving. Um, and so there are still touches there, but I would argue again, as our members' lives become more complex, the world's becoming more complex exponentially each and every day, then you need to make sure that you have teams that are equipped to serve the members and serve their needs. And I think when you look at that, there is an equation, and unfortunately, we live in a world of finite resources, and you have to make some tough decisions. And so for us, again, I'm not saying it's for everybody. For us, we decided that we wanted to focus in on trying to simultaneously reduce expenses, grow revenue. And we did that through trying to focus on automation of both our expenses and also automation of our revenue. I would argue that, having the bots is no different than having pre-approved loan offers inside your mobile app. It's the same kind of strategy. And so maybe some people are more comfortable with the pre-approved loan offer, some people are more comfortable with the bots, but it's the same strategy down the same path. It's just different points in the race.
Yeah. And so, um, I was watching a CU broadcast video the other day with Ron Shevlin, who's very well known, snarky
Yeah.
guy about everything. But in particular, he was talking about digital transformation during COVID. And a lot of people do talk about the acceleration of digital transformation when really, and I think I lean his way too, a lot of credit unions were throwing band-aids at the issue of remote service to members, um, and not truly digitally transforming, because that's a lot of back end work before you even get to the member facing stuff, right? So what are your thoughts on that, as and um, Ron Shevlin's commentary?
Yeah, I haven't watched that one yet. I saw, I do enjoy his commentary, and always a big fan of CU Broadcast as well. They do a good job reaching out to our industry and sharing relevant topics at hand. But I think for me, to answer that question in a different way, but I'll get to the answer. I think if you look at Harvard Business Review, HBO put an article out maybe in December, I want to say, about work from anywhere. And in the article, it was a fantastic article, short article, maybe 2-3 pages. And but the research that they put out talked about that in order to really get to a work from anywhere environment, the CEO, the executives need to go work remote. Until you do that, you won't know how to successfully do it. You won't know what the experience is for your employees. And also your employees won't work remotely anyway, because what happens is your employees will want to have FaceTime, and then they view that FaceTime in the office as an advantage, maybe depending on your culture. And so then no one ends up working remotely, and then you don't end up embracing that skill set. I think it's the same thing with banking, right? So if you're not using your services remotely, if you're not using your services digitally, then you don't know what that experience is. And you have to, I think you have to be intentional about it too. I think you need to be, obviously documenting the different processes you go through, and so on and so forth. Our biggest pain point is registration process for online banking. It is a nightmare. It is ridiculous. We're addressing it now with our partners, but again, I think, when you look at that, how many, we all go to work and there's a branch right in our headquarters, or there's a branch nearby our house, or whatever it might be. So we're used to just kind of popping in and taking care of whatever we need. And a lot of people say, well, I haven't used the branch in years. Well, what about if you need a cashier's check? Or what about if you needed a sort of, something requiring, maybe it was a signature stamp, guarantee or something, those kinds of things. How do you replicate that environment? Are there other third parties you can go to that you can use? How do you build your ecosystem digitally in a world that allows you to serve your members wherever they're at? So I guess that would be my comment is we need to spend more time in the shoes of our members. And if we're trying to serve them remotely, then maybe, maybe the executive teams and the digital teams from credit unions should go to, some other state. For us, might be, Arizona or Nevada or whatever, and spend some time there just to try to figure out, like, what are we going through? In the work from anywhere environment, we made sure that, I spent time away to make sure I understood what the team was going to go through. And there were a lot of ahas that happened, especially with time zone differentials. So these are just things I think that are important and informative to some of the decisions.
Yeah, yeah, absolutely. You have to actually practice what you're preaching at times. And so if you were a betting guy and you were to say how close the university credit union is in for right now where you'd like to be digitally, if that makes sense.
Um,
Are you like 75% of the way there? Where would you place yourself?
yeah, I mean, wow, that's tough. On a relative basis, I think that we are doing very, very well relative to banking in general. And so I think from that regard, maybe 60, 61%, something like that. But I think that from a digital perspective, what our goal is and what we think this could mean for the future, we're probably closer to maybe 15 or 16%. And we're way behind the times when it comes to, serving our members, being relevant in the digital world. Um, when you look at what the fintech companies are doing, how they work through their acquisition, you look at our regulation and limitations that we have around field of membership that are zip code or physical reliant versus more relevant in a digital world. These are things that we're going to have to address as an industry. And until we address those things, some of those constraints, I don't think we can move past where we're at right now as far as that 15, 16% comment that I made relative to the digital world. And the fintech companies are going to keep coming. We see it also with ed tech, we see it with insurtech, we see it with, so it's every industry is feeling this. It's not exclusive to credit unions or banking. It's just what we see each and every day, but we need to be making some bigger leaps for sure.
And what's particularly interesting to me is university credit unions 873 million, nothing to sneeze at for a credit union size, obviously, but it's still relatively small in the overall financial services market. But I would bet you're ahead of most on this scale, on the digital transformation scale. So, we talked a little bit about this, but how are you able to accomplish that with a smaller-ish credit union?
Yeah, no, we are. A friend of mine once said, this was at the QCO Institute about 11 years ago, and something that stuck with me. Bill Vogany from Ant Credit Union, he said, we're a speck on a fly on the back of an elephant. And I thought, what, that's a pretty good analogy. And so that's probably relevant for us that when you look at the top 5 banks, all over $2 trillion in assets, and our industry is not even 2 trillion. So we could all say that every credit union is small relative to the financial services marketplace. So again, as I mentioned earlier, the world is finite resources. Basic strategies built around making sure that your team has the right acumen. You got to make sure you allocate resources effectively for your strategy, and then you have to take action. So just simple 3 A's. And for us, I think the allocation piece is what we focus in on, that we know we have to take and focus on digital, and that's where we're going to take our money and invest and put the bets behind. And I do think that you need to make, every CEO, every company needs to make, 1 or 2 big bets every year. You need to be making those to help push, and encourage your organization to move forward. And obviously in consensus, obviously with your board, obviously with the executive team, but I think ultimately the organization needs to be making those couple big bets. For us, again, it's the allocation piece. And so from our strategy, from our 10-year scenarios, we then say, what, these are the things that we think that we're seeing signals and drivers behind, and then that's where we're going to place and allocate our dollars towards. So it is a bit of an intentional process. It's not done by luck or by or haphazardly. It's done very intentionally. And then if we do get things wrong, and it does happen, then we learn from them, right? Because now we have a process to address this. And then if we get something wrong, we say, okay, well, where did we go wrong? Where did our process break down? And then we can learn from that and build a new system, a better system going forward.
Yeah, actually, what you were just talking about remind me, I was talking with a credit union CEO the other day who shall remain nameless, but he was talking about how volunteer boards are not incented to take any risk, because they're volunteer. And, it is a personal risk you do take just serving on a credit union board.
And you know that.
I know that personally. Yes, I have to sign the document. But, what role do you think that plays in credit unions not advancing more digitally and taking those, you mentioned the 1 or 2 big risks you got to take every year?
Yeah, I can't really speak to that for all boards of directors. Obviously, the majority of the boards I worked for in my career, been 22 years now, and worked with about 9 different boards of directors in that time frame directly. And so when I look at that, the boards I worked for were all very inclined to take risk, and they were all very inclined, calculated risk, right? They wanted to be informed, they wanted to understand it, and no issue. My current board of directors, fantastic board of directors, made up of it's probably the most diverse board in every way you can think of. And they've done a tremendous job in being intentional about embracing diversity at the board level. That's reflective of the university community that we serve in California. And I can't applaud them more for that. The board's made up of highly educated individuals, EDDs, PhDs, MDs, JDs, MBAs. It's
So you got your work cut out for you, basically. A lot of really, really smart people.
a lot of, and that, I think that's reflective of kind of our operation, right? So because they've been so intentional in their design, again, that encourages the organization to respond and reciprocate, right? It's a natural human tendency to reciprocate those kinds of activities and mirror them. So from our board perspective, they understand it very much. We still have anchoring tendencies, right? We still have the bias though that we have. If many of my board members are on campus, one way or another, either serving directly from employment or serving directly on some committee, or maybe it's a retirement committee as well. And so, there's always comments about what we need to be doing physically for some activity or some event. And so those kinds of things still happen. But I think for us, it was, and I encourage everybody to do this, if you haven't found a way to get out to the 10-year scenario. I know people say, well, you can't predict the future. You're not. You're building different forecasts and scenarios to equip your organization to be prepared to what's coming around the corner. And so you got to be prepared for that. And the only way to do that is to get out away from facts, right? So, if you're at 3 years, you have, facts that are going to kind of lead to more certain environments, and you have to get to uncertainty. Bob Johansen, the Institute for the Future, said the organizations that are operating in certainty will be the ones that go out of business, right? We have to get out to that 10-year time frame and get to this level of uncertainty. Then at that point, your board, your organization, your executive team, your management team, and your team will ultimately be able to look out there, see what they need to get prepared for, and then start preparing for those various scenarios. And sometimes, many times it's the same skills or the same levers that need to be created to address all those scenarios. And so I know it's a long-winded answer, but I think it's really, you're asking me really complex questions, and I want to make sure that I was thorough in my answer. But and I've been very fortunate in that regard. I don't think it has to do with compensation. Our industry was built on passion and was built on being mission-driven and mission-focused. And when you look at the individuals, whether as filing or whatever it might be with donations that were given with no incentive, no return at all, $1 million invested to kick off credit unions in the United States without having any return at all. You look at, Louise Herring with carrying around chartering papers that, at night she would just drive all over the state of Ohio and charter credit unions. We had over 25,000 credit unions at one point in this country, more than that. And we're down to 5,200 or whatever the number is today. But the number of credit unions is built on passion and mission driven and solving problems for, sometimes it was marginalized, sometimes it was underserved, sometimes there's a particular niche that wasn't being served the way they wanted to be. And so they created these alternative financial providers called credit unions. And I love this industry tremendously, but I don't think it's compensation related. I'm not for or against it. That's a decision every credit union needs to make. But from our regard, I think it's more structural and more getting back to our roots and understand what is our core purpose, are we mission driven? And then from there, everything kind of takes care of itself.
Heck yeah. Heck yeah.
Right. Yeah. Go credit unions.
Well, and it's great to hear a credit union leader, and particularly, a relatively young credit union leader who is about creating, continuing to build upon the legacy that credit unions have already enjoyed and built, and the forefathers and mothers built for us to build upon. So, going off that statement about credit union's mission and serving members, and how are the investments that you're making, time, money, and otherwise, supporting University Credit Union's mission to service members?
Yeah, so during the pandemic, we had the same financial effects everybody else did. We, forbearances, we eliminated all fees. that was actually impactful financially, but it was the right thing to do to help our members through this difficult time. Those are some of the short-term things that we did to address the pandemic that we're currently in, and hopefully getting out of this year. As we move forward, we also took advantage and said, look, how else can we support the university communities this time? And so obviously one way is financially, and we put some pretty big investments behind our universities, Pepperdine University, Loyola Marymount University, UCLA, making more investments there, University of California, Davis, Santa Clara University, St. Mary's College of California, the West Coast Conference with the 10 faith-based schools that are there, the Big West Conference, which are 5 UCs, 5 Cal States, and then also University of Hawaii. So again, this continuing to find ways to be involved, focusing on scholarships, focusing on education for staff at these great universities, help support and invest in the student bodies and continue the work that we're doing. Everybody's feeling the pain. I believe that last I heard at UCLA, they were at a budget shortfall of 1.4 billion. And so everybody is seeing that. Some of the small universities are seeing budget shortfalls of, excuse me, about 120, 130 million dollars, which is significant. You think about all the housing losses, the dining losses that they normally would have. They're still carrying the expense of that, from a building and staff perspective, but they're not getting the revenue from the tuition and housing that they normally would. And so they're having these tremendous losses, but they're not making the layoffs because it's, just trying to weather the pandemic and play their role in getting this country back to where it needs to be. But with that being said, I mean, those are the things that we're spending time on, that we're investing in. We're invested heavily on digital education. So how do we roll out seminars, webinars? How do we build capabilities, competencies to serve the needs? Spend a lot of time listening to our university partners. What do you need? What are the current challenges? What are your teams dealing with? How can we play a role in solving them? How can we support you through this? What's coming up, next year? What are the plans? Knowing what's going on with them the next 12 months, trying to figure out how can we, how can our DNAs mix in order to ultimately achieve and recover from the pandemic or move past it and whatever that next vision is, that next version of what our vision is. So that's how we're spending our time, and it's worked out fairly well. And we had, in the past year, we had about 32% loan growth. The year before, we had 32% loan growth. And this year we're already started off fast, and we think that we'll be above 30% again this year.
Nice. Yeah, no, that's particularly impressive for 2020 when everybody seemed to be throwing deposits in and not taking out so many loans as far as the membership's concerned. And also just, I wanted to comment too, it's just very appropriate where you're placing your time and your money for the particular communities you serve, and doing it with some depth rather than, throwing money at a particular cause that of course is helpful, but it doesn't provide the depth of the relationship that you can build with that way. And so speaking of building relationships, I was studying your credit union before we scheduled this call, and it's amazing. You guys have like a full suite of everything. It looks like at your credit union, and beyond just products and services, there's tutorials on how to use the products and services. There's financial wellness and coaching and a lot of different things. So it seems like financial wellness, and again, April is coming up soon, is financial wellness month. So that seems like a real critical mission for your credit union in particular.
It is. I mean, again, we just think that that's going back to our core purpose of giving the university community a financial edge. What does that mean? So we do it tangibly from our best rate guarantee, and we also do it from a service perspective around our unbiased and conflict-free advice and consultation we give our member owners. And I think that's a big component of it is, we're different in how we're designed. We're different in how we're built. Because we don't have individual incentives. There's not a single team member that has individual incentives in the entire organization at University Credit Union. And that way, when our team members meet and talk to our member owners, it's not about, hey, I'm being incentivized for this product, I need to try to sell this product. It is, what are your needs? What are your wants? What are your desires? And let's create a roadmap to go achieve that. And I think that's, again, different by design. And so far, it's worked out really well, and our members are enjoying and knowing that they can trust what they're hearing from our organization.
Yeah, no, and trust is the foundation of it all. Any business, but particularly a financial services provider. Um, so yeah, like we've talked a lot about digital and financial wellness, and um, you guys have separate sections on your site for financial wellness, financial literacy, financial counseling. How are they different? Because they are, I agree.
Yeah.
How are they different and how do they work together?
Yeah, so it's really where you're at in the race, right? So I like to use a marathon approach. I've only ran one, and that was good enough for me. I know that you've run also, but with regards to marathon, some people are in mile 10, some people are in mile 15, some people are just starting the race, and so you have to be meet the member where they're at, and so. Some people are in just getting started, and maybe that's more of a counseling conversation. There are some people that are closer to the finish line, and that needs to be more of a financial planning conversation. And there's some that are in between, and they need to have a financial coaching conversation, right? And maybe through a life event, and maybe through even getting started, encouraging them to start planning. You know what I mean? That, right? What did Benjamin Franklin say? That those who fail to plan to fail.
Mm-hmm.
And so I think it was Benjamin Franklin. And so yeah, I'm sure a lot of people say that's the one. You're fact check that one while we're doing this. But, and anyway, that was I think that's the differences for us and how we look at them. Again, our team starts out as a member service specialist, then they become a financial member success coach, member wellness coach, and then ultimately a financial advisor. I think. Again, it does come at an expense, I think, but it's a great investment. If we're allocating dollars for our employees first, totally okay with that. University of Creighton, no one in the organization makes less than $20 an hour, and so we are very much ensuring that our employees are going to live a comfortable life, and then also through our different programs, we're going to make sure that they can enjoy an entire career at University of Creighton and then ultimately retire very comfortably and not be subject to financial duress or stress because they weren't given the opportunity to save money or receive a robust match to help support them throughout their entire life.
Yeah, and I think it's a really important distinction you just made too about expenses versus investment, because I noticed you use both terms, and I feel like so many businesses and credit unions as well sometimes see these things as expenses rather than investment in the future of the organization.
I think that's a great point, and I didn't say it intentionally that way. It's just a part of our culture.
Well, you're brilliant, so it just happened.
No, I think it's just it's been socialized, right? It's embedded in our culture, and again we it's great to hear that kind of response. I'm excited actually by that. So now I'm just stumbling, but yeah, I that was great. Thanks.
So one of the things, and as a person who's been in marketing, digital publishing for a long while, your website is amazing. There are so many very not good credit union websites, frankly, that I've seen. And so it's easy to navigate. There's a ton of information. I couldn't find anything I didn't know I needed. And I assume that's part of your digital service strategy as well. But there's also an Ask the CEO section, which I thought was really interesting too. What do you want to hear from members? What do you hear from members? All that.
It's a great question. I think ultimately, I think it's the duty and responsibility of the leadership team to understand and know your membership, but also know your employees. I've met with every single employee at the organization. I meet with every one of them as they get onboarded and hired. I also, through this pandemic, have met with every single employee twice, virtually in Teams, and that's a time investment endeavor. But I think that when you do that, you now start to see them as people and not as numbers. To kind of talk about your questions, a second ago around expenses, that's why we just talk about things as investments when we talk about our team, because we do spend so much time, and it is intentional that we want to support them, and we're with them. I think the same thing with our membership. I want to make sure that they have direct access. If there's something that we're doing wrong, I want to hear about it. I also want to hear about if we're doing something well. I mean, many times our member owners want to say, hey, you know what? I got I had this huge problem and they took care of it so quickly, or it was first call resolution, or, you know what, I'm just, I've been a member for 30 years and I just really love the changes that we're seeing. Those kinds of things, a lot of times we don't get that feedback because they don't have, they have to wait for a survey to be sent to them, or maybe they just made a comment to a manager and I didn't get back. And so many times it's a compliment. But again, we're front and center. Members have complete access. It could not be easier to get to and have access to their CEO if that's what they need. Also about our website, you do talk about that. I think at Google, you hear leadership talk about, our job is to never be happy or satisfied. I think that's reflective of our chief marketing officer, Tristan Dion Chin. She does a fantastic job in always making sure that she's pushing the envelope forward, and she has this insatiable appetite, in particular around the website. So as you mentioned the website today, it's every month continuously fine-tuning, continuously improving the website. But they're also going through an assessment right now of, hey, if we tore it all apart today, how would we rebuild it? What does that look like? And why aren't we there? And again, her team's doing a fantastic job. Entire marketing and engagement teams really do a great job reimagining themselves each and every day, reinventing themselves.
Yeah, and that's important for relevance of the credit union,
Yes.
long term. Absolutely. So what's next for University Credit Union? What's next? What's the big priority right now?
Well, I mean, you think about, next is here already. And so, sometimes we talk about, we should talk about future then next, right? So, and that makes it a little bit easier. But for us, again, we have some major technology investments that are going on. We have a major investment around, some development on our internal processes that we're working on today. That will be completed in November. And then also we have mobile and online banking transformation that we're currently working on. But we're going to continue. For us, it's going to be continue to understand how we can leverage a digital workforce to automate and elevate our organization. And so for us, it really is about, how do we take those bots, automate the mundane, automate these workflows across various systems that typically required manual touches, reduce errors, increase speed of service to our members, right? So we're increasing speed, we're increasing quality simultaneously with these bots, and then ultimately elevating our team to take our organization to the next level. And so we can take our current workforce and then instead of operating as $1 billion credit union, now we can operate as a $2 or $5 billion credit union with the same number of team members, leveraging that digital workforce. So I think that's probably the best answer I can give you right now.
Excellent. Well, thank you very much for your time, David. Appreciate it.
Yeah, always a pleasure. Thank you for having me. And I always love geeking out about credit unions. So one nerd to another. Yeah.
You got it. Thank you.